And then I'll share that in here as well. Because we got 30 minutes. App loving at Lowe's. Man, that hurts so bad. Oh, that hurts so bad. Oh, check your DMs, Christian. Hold on, let me message him since he can't hear me. Oh, there he goes. There he goes. Yo, Christian. Let me know if you can hear me, brother. On StreamYard. I can't quite see your face. Oh, there you go.
Yeah. Can you hear me?
Oh, I can hear you perfectly. Hold on.
Okay,
Let me
great.
just share this with people from into the room and stuff so everybody knows that I'm on X.
Okay.
Share via copy. Yeah, if you're on YouTube, I also posted it on X. All right. All right. So let me ask you something. Because we're obviously, it's such an interesting environment, man, where we're kind of at this place in the market where you're getting these pullback buys to work, if that's your thing. You're getting huge moves in the energy space, and I'm long energy, so I don't mind it at all. If you're long fertilizers, you're loving it. But then the other part of people should go, this isn't a bullish environment. Look what they're doing to financials. Look what they're doing even today to semiconductors, where they're gapping below the 50. Is this just an environment where you're telling yourself, I'd just rather go play tennis?
Yes. This reminds me, I was trading at the time, but not actively in equities. This is when I traded at a prop firm in treasuries and treasury futures. But this is like 08, where you had oil and I mean, the fertilizers rallied first and then oil rallied later, but it reminds me of that kind of environment. And obviously growth did not do well in that environment at all. So if you really focus on growth names, there's really not much to do. I mean, you should be in cash, almost overwhelmingly in cash, and just sitting and waiting. And sometimes you wait a really long time. When I first started off, I would do really well. Like 2017 was a great year, 2020 great year. There were opportunities in 2018, 2019, but in general, you get like an everything up rally, like a really powerful rally. It's like usually once every 4 years. When I say everything up rally, I mean a rally that's so powerful that it's hard not to make money. Like I'm thinking like 2017, I think the largest pullback intra year that year was like 2.5% on the S&P, maybe 3%. Like the entire year, it was just a 45-degree angle up. Super trend environment. 2020 obviously fantastic year. 2024, 2025, I think both were pretty great years. And then you get periods where it's just more difficult, and that's just the way it was. If you could just print money every single year, I mean, look, obviously guys can do that. There are very skilled traders that can do that, but for us mere mortals, there are easier times and there are tougher times, and it's just the way it is. And I'll do that analogy again, where I had a lot of friends that like reached out and they all want to start trading now after 2 great years of trend. And you got to expect it to be tough. I mean, I hope it's like the late 90s, where you get like a 6-month correction every year for 5 years, and then just a really powerful rally. Like you saw that in 96, 97, 98, you had a bear market and then a really powerful rally. Yeah, you just have to wait and see. I don't have a crystal ball. I don't know what's going to happen next.
Yeah, I mean, it's crazy to watch a name like FSLY, be as strong as it is. It's looking at a name like VRT. We're finally starting to get a little bit of a breather in, a Micron today, but this chart doesn't necessarily look done. Like we still have enough merchandise. And then again, for anybody who looks at active money managers and AIM,
that's getting down there. Yeah, the sentiment's starting to turn.
It's starting to turn.
So still need a little. You still need more. I mean, I really want to see a put call spike. Haven't had one of those in a while. and the sentiment just to stay negative. I mean, it's been, you know, I have a spreadsheet I use to track it, and it's starting to turn, but you know, at correction lows, it gets more extreme. You know, like the AAII turned negative, which is great, but it's only 1 week of that. Usually you get multiple weeks of you know, bear sentiment on the AAII and NAAIM below 50. The Investors Intelligence Survey is turning. I mean, it's starting to turn, but it
Not
would be
enough.
unusual.
Not enough.
Yeah, it'd be unusual for us to really have a strong trend without it turning more.
And then another thing that I'm looking at is the QQQE, and you've already broken Monday's lows.
Ooh, yeah,
so
that's not a look you want to see if you're a bull.
the average name is already, you know, breaking down. And then obviously, you know, I look at the QQQ and I ask myself, we get you know, a rejection of the 50-day again yesterday. You get a gap down, you get all day follow through today. And how many people actually want to hold risk into the weekend? I know I don't.
Yeah.
You know, I don't want to sit there and be aggressive into a Friday session. So yeah, it's such an interesting environment when we have this many stocks, like even on the IGV side. You know, is this just bottoming? I have no idea. Is software starting to maybe, you know, carve out a bottom? Is Bitcoin starting to carve out a bottom? They've already kind of maybe gone through their own bear markets, but you look at financials, you look at software, you look at crypto, maybe they're just kind of foretelling of what's going to happen to tech, right? And you look at the XLK, which I'm sure you do. This is the QQQ effectively.
Yeah. Mm-hmm.
So you start to lose the 200-day, you start to lose Monday's lows. Yeah, bigger corrections on play. I've been kind of hopeful for a move all the way back down to 2025's highs.
Yeah.
You know, maybe not as violent as we got it last year, where it just like quickly retested those 2021 highs, but just a little bit more drawn out. You know, even if it's got to last all the way until August, something like that.
Yeah, that could very well be in the cards. I mean, the quick, sharp ones are easier in a way, or they're better because they're just over fast. You get it over with. But the long, drawn out ones with, you know, multiple rallies that you think are gonna, and then they just end up rolling over. Those are, I think those are tougher. Really, if you're not patient, I mean, you can really get chopped to pieces. You think, oh, this, you know, that was it, that was a low, and you pile in, and then it just everything rolls over.
And that's what made 2022 so shitty. Is it you did have sharp rallies back up, but ultimately you went on to make lower lows. And it was just so drawn out. Like you said last time we spoke, it was price and time, right? It wasn't just like, this is a consolidation through time, not really price. And it sucks because the market gives you an FSLY, it gives you a VRT, it gives you enough tradable stuff that it just like dangles a little carrot, but growth is effectively outside of, you know, call it 10 stocks, you know, AAOI included. And maybe some of these memory names for like one more final push. It sucks. I mean, I still kind of lean bearish. I find myself, you know, trying to get short more stuff than I do long. And then also, you know, yesterday I tried to buy Dell and it just doesn't close well enough for me to keep. And then today it's showing relative strength. I short NVIDIA yesterday when it rejects a prior day high, and it just doesn't close weak enough for me to keep. And then today, you know, it's gapping down. The market's got a funny way of doing that. It doesn't let you keep the long. It doesn't let you keep the short. One shows relative strength the next day. One.
I mean, that's the argument for cash in this kind of environment. Unless you're very patient with, you know, wider stops, but that's just not really how I do it. Do you watch Asia or Hong Kong at all? I don't know if Clement mentioned that he's been trading the Chinese LLMs like Minimax or Knowledge Atlas.
No, is that actually what he's finding himself trading right now?
So punch it and type in Minimax, and the ticker is 100. Yeah, look, Minimax. One word, Minimax.
MAG or MAC?
MAX.
Minimax Group.
Max.
Okay, got it. 100.
Punch that in. Look at that chart.
This is actually super clean right here.
Yeah, I know. That's I was watching it. I was like, man, why didn't I trade that? But look at that initial IPO. I mean, super clean. But this is what's so fascinating about it. You ready for this? It's like I was actually reading about this last night because I brought it up on my Interactive Brokers. So it trades in 50-cent increments. Okay. It's like the 1970s. It trades in 50-cent increments, and Hong Kong charges you it's like percentage based rather than per share basis, per share. So it's like a point. It's like a percent. I mean, like the fees. I think I was looking at Knowledge Atlas, and it was like to trade 10,000 shares would have been like a $1,300 commission. And I think Knowledge Atlas, I want to say it's maybe Minimax is $1 spread, and Knowledge Atlas is a 50-cent spread. You can type in Knowledge Atlas, 2 words, knowledge, then space Atlas.
There it is.
2513. Yeah. So these are like 2 of the Chinese
recent
Chinese,
IPO,
like AI tigers, or these are like the LLMs that were stealing from Claude. That I don't know if you read about like the 25 million figure.
I did. Yeah, they were scraping Claude.
They were scraping. Yeah, these are 2 of them scraping Claude. But imagine trying to buy that breakout. So it looks so clean when you zoom out, but that initial bar, it was up like 30% that day, right from the lows, like vertically up. Yeah, imagine trying to buy that breakout. That'd be a tough breakout to buy. Like pulls in below the 20 and then just rips 30% in one day, and then just goes vertical. I mean, that's such a Chinese stock. Like, that's just how they move. Like they just break it out of nowhere and then just go vertical, and you're like, yeah,
unbelievable. So there's always something to trade. But you have to go hunting for this kind of stuff. And so like what, you buy the breakout and your stop is 15% to low a day?
I don't even know how you do that. I mean, I don't know how you'd even get in there. I mean, you'd have to buy it and then like maybe stagger a stop with your ultimate stop being like 20%. I mean, it's just so crazy to I mean, I don't know how you buy that with any kind of tight risk. It'd be really difficult.
Yeah, this is going to be an interesting market, because even when you look at home builders right now, it appears like the market is pricing out the idea of a rate cut. You've got a strong dollar, which, if we've learned anything in the past, strong dollar should be bad emerging markets and should be bad metals. So you really have had gold going nowhere. You've had silver going nowhere. And, today, of course, you run into a support gap, find a little bit of support, but you've had gold going nowhere since the ugly dump. In fact, this has been impossible to trade. The silver has done absolutely nothing. So probably best to just leave these alone. The QQQ is effectively inverse USO at this point.
Yeah. Yeah.
By the way, if I tweeted this yesterday, I have never seen, and even in 2022, 100 good-looking energy charts at the same time.
Yeah. They all look the same. I mean, they're just going up.
Yeah, I look at this
upper right-hand corner. Yeah.
I look at this NE. I go a little bit longer. This thing looks phenomenal.
That looks really good. Yeah.
Scrape the name off, and it's energy, right? And you're probably just one Trump tweet away from, these things maybe yanking super hard.
Yeah.
But they look great. If you didn't know they were energy and you just didn't think about industry groups and you just focused on technicals, far and away, the cleanest and strongest technicals in the market are energy stocks.
Yeah. Oh, yeah.
Problem is, some of them are a little extended, right? Like even today, I found myself at 6.5 times its ATR from the 50, trimming some VLO. You're just getting a little extended, right? I've been in this thing since early February, right? I've been in XOM going back to December. Mm-hmm. So for me, it's just, look, at this point, I'm just trailing with the 50-day effectively. So, like anybody who, somebody asked me today, like, Ariel, would you buy CVX? And I said, absolutely not, right? You're 6.5 times its ATR from the 50. Doesn't mean that when you look at maybe the monthly on some of this stuff, I could argue that this is a fresh multi-year breakout. We're going to be talking about energy in December, right? Like when you look at a 3-year breakout, when you look at EQT, this is a 12-year breakout. Usually 12-year breakouts don't resolve in like
a month.
In a month, right?
Yeah.
We could be talking about it in December. it was like a 10-year cup and handle on gold that took 2 years to play out,
Yeah,
right? A 3-year base on ExxonMobil could easily take 8 to 12 months to play out.
definitely. I mean, go back to 2008. That move was, I mean, that was like a big move in 08, or maybe not an Exxon. I'm trying to remember. There was a name that started with a C that was like a huge mover. There were like a few oil names that like doubled and tripled in a very short period of time.
Like not a CNQ, right?
No, it wasn't that one. It might have been delisted, but I remember there were a few oil names back then. But I don't think I ever tracked them in my Evernote, because oil is just it's difficult to trade. Yeah, I don't have it in my Evernote.
Yeah, I mean, here's a big move from '04 all the way up to basically the peak, in '08. I mean, these are big moves. I mean, again, slow. These are very slow movers. So like now what we're seeing in the energy space, like these are very, very fast moves for, a name like this one to move 25, 30% in a few weeks is a lot, is really a ton for a CVX or an OXY or, here's another one, the Warren Buffett special on the daily coming back around. DVN is another one. PSX is another one. ConocoPhillips is another one. Again, I was going through the list yesterday. I've never seen this many energy stocks, not even in 22. Yeah. Not even in 22. So.
The group moves are powerful. I mean, that's, when you see an entire sector all looking the same, that's like, the fund managers are just, they have a basket and they're just pressing the buy button, or they're VWAPing in. And I mean, that's what creates these symmetrical patterns, where they all look the same. I mean, you can see it in memory. You see it in oil. I mean, you see it with semis all the time. I mean, in like 2017, the semis, I remember they went parabolic. I mean, not really, but they had a blow-off-ish move, and then they all formed simultaneous VCPs. So like 7 different semis you could have bought, and they all basically look the same. And then they broke out. They all went up another 40% in like a few weeks. So no, like when an entire sector looks the same, it especially when they look bullish, like it works. I mean, it works really well.
Yeah. Yeah, somebody was mentioning that they're long GDX while I'm short. They think it will test 117 again. The only thing I would remind you is mind price. Where are you leaving in case you're wrong? Remember, GDX is now below the 50 simple moving average. Also, remember where this stuff has come from. I don't know where you're long from. If you're long from like this base last August, yeah, you should have no problem holding this pullback. But if you're long, on this breakout, and it failed, I would just tell you, know where you leave in case you're wrong. Yeah, Christian, this is going to be an interesting environment because I keep thinking back to people not necessarily wanting to hold risk tomorrow being a Friday into the weekend. Yeah. So naturally, I'm already thinking it wouldn't even be an expectation breaker if we just came lower. That's like my first thought. So a move lower tomorrow for the Qs doesn't necessarily I don't think would be wrong at all. And then does that just put us right back up against Monday's lows into the weekend and gives everybody something to think about? Because ultimately still above the 200-day is still bullish, right? If we can get enough new merchandise to emerge and then semiconductors to maybe bounce back in a strong way. But today, man, first 5 minutes of market open, I noticed ASML losing the 50. I noticed TSM losing the 50. I noticed LRCX below the 50. I noticed KLAC below the 50. I noticed Intel not able to bounce basically even in the slightest today. And you just kind of like went down the board for semiconductors, and they're hanging out, a bunch of them below the 50, and SMH, a gap below the 50. Effectively staying heavy all day long.
Yeah.
Again, still above Monday's highs. So you want to give the market a benefit of the doubt where you're kind of like, that's my line in the sand. But, how many lines in the sand are, you'll break that line in the sand and like you'll create like a new line in the sand.
Yeah. I mean, that does not, it doesn't look great. I mean, that chart does not look great. I mean, the volatility is picking up, and we've had a really big move since the 2025 lows. I mean, that's a big move. I think I tweeted about this. I was talking with Clement about this, about gold, about how, when you hear about so many leveraged players get taken out, like, I mean, if you read any articles about what happened in Shanghai, where you had like Chinese retail getting liquidated and losing 80-90% of their account values on that huge gap down in silver and gold, usually like that's it. I mean, when retail piles in and then gets carted out, that's usually it on the move. It doesn't mean it goes, I mean, it did go straight down, but then snap back. But it's extremely unlikely you're going to have higher prices from there. Just in my experience trading, I haven't really seen that.
Oh, you mean where gold goes back
when
up?
You have when you have retail pile in and then all get liquidated, it's like the amount of leverage necessary to get gold up to those highs was extreme, and then they all got taken out, and that's gone, and it's not coming back. Right. So how do you get price back above that level? Like, well, you don't. I mean, there's just so much leverage there to get it there in the first place.
And it would take everybody or whoever's left leveraging back up, which is probably not going to happen.
Extremely unlikely.
Yeah.
Extremely unlikely.
And I always thought, what do they say? What's the famous quote, Christian? Parabolic moves don't end in a consolidation.
Yeah, they don't end up going sideways. Yeah,
exactly.
Yeah.
They
how
many
bases is that in gold? I mean, that's like at least 5 bases, right, on the way up, and this is like like what?
This is your initial base breakout.
1, 2, 3, 4, 5, and this is like the 6th, and now this one is like super wide and loose, extremely flawed. The volume signature is all wrong. The volume's on the way down. Then there's barely any volume on the way up. So this is like an extremely late stage base.
And again, it's coupled with how many people told you the dollar was about to break this like multi-generational trend line going back all the way to 2010, and how this, the dollar was just about to implode. Except the dollar does almost exactly as it should, stick save right at the lows. Yeah. You kind of sucker everybody in, thinking, oh my God, the lows are breaking on the dollar. It's over with. Yeah. But ultimately, it's not over with. It's just to undercut and rally. And crude oil did the exact same thing. Crude oil futures, when you look at them back in October lows, this was the exact same thing. You just break the most recent lows, everybody panics out, and then ultimately that is the low.
That's it. Yeah.
So dollar's very, very similar. And again, if you start to see the dollar going down, we could pretty much kiss emerging markets goodbye. You could probably kiss the metals goodbye. And it was the funniest thing, Christian. I was eating dinner. I was in my office. My wife brings me dinner into the office, and I've got my headphones on. She's trying to talk. And I'm like, babe, shh, I'm listening to Peter Schiff tell the world on Twitter Spaces that gold won't go down 10% ever again.
Okay. He's a Michael Saylor of gold. I mean, it's incredible.
Yes, and he literally says on Twitter Spaces to thousands of people, gold won't go down 10% ever again because so many people are waiting for a pullback to get into gold. Meanwhile, gold's, silver vertical, is 12 o'clock vertical. And I just kept saying to myself, like, we are so close to the short here. We are so close. He was like, you listen to like some hype music before you go do a workout or something. This was that equivalent for me, listening to Peter Schiff, and I was enjoying dinner to listening to him say some nonsense.
That's too funny.
This is going to be an interesting environment because I think we are all wanting the pullback. And another thing that we've been seeing in this environment is so many people have been buying protection to the downside. So when you do get a little bit of a downside move, and people get out of that protection, it creates a little bit of a liquidity buffer for the market really just speeding lower. Instead, it just kind of, you'll find buyers early in the week, and then it just builds a lower high, and it just chops sideways. And what a miserable environment, man. Yeah, what an absolute miserable environment.
The game tests you in every way. I mean, the patience required in tough environments to just sit around and not chop yourself up. I saw some people in chat like talking about that. Like, I keep trading. I know it's bad, but I keep trading. Well, so I mean, I do that too, but now I do it with extremely small size. So it's
even matter.
It's whatever. It doesn't really. It's like I was talking with someone about how you go through like a 70% drawdown over 3 years. Like back in the day, like I went through one of those, and you make it back. And you just know that in the right environment, you can make it back real fast. You just have to wait for it, and it's just about not giving it away when the time is not right.
Right.
So
Yeah. I mean, I even found myself trying to play a bit of a reversal today in Rocket Lab, and I've got a 2.5% portfolio position. Like, I just absolutely refuse to put on anything. We're not even going to get close to 10% position size out here.
yeah.
It's just not going to happen. I won't be doing it at all. And God, this Palantir, man, this very, I also, Christian, I look at this arc, and this looks a whole lot like a continuation bear flag.
Yeah.
So,
Yeah, it does.
it's like you look at this and you look at some of Kathy's holdings, which include Tesla. We are awfully close to losing the 200 simple moving average on this as well. I mean, how could we be, jumping for joy in this environment?
Just gotta sit and be patient. It's tough. I mean, this is why having hobbies is really is really a good thing. It's I don't know how you can sit in front of the screen all day. I mean,
I've got students to talk to, and
yeah, the
like,
audience,
newer traders who want to learn, and
yeah.
oftentimes in this environment, you're just telling them do the absolute least, do the least as possible. Keep yourself out of trouble. This LYB, you want to talk about another clean little setup, Christian?
Yeah.
Were you looking at any of these chemical names to buy for yourself?
They don't even pop up in my scans. I mean,
why is that?
Well, because I'm looking at names near highs, near 52-week highs and all-time highs. So I focus on growth. So, but yeah, if I was focused on recent relative strength or names coming off the lows, that they would pop up. But if you look at this, it's not in a stage 2 up. It's trying to enter a stage 2 uptrend right now. So the only time I would be trading names like this would be coming out of a bear market. Then I would be looking for names near their lows, like a Carvana in 2023, which I butchered. But I haven't had a lot of success trading laggards in the past. I get it. Sector rotation is now arguably the leading sector, but I'm just sticking with what I do well. So yeah.
So even like for instance, an ExxonMobil, because it was so close to all-time highs.
Yes.
Even here, would something like that come on your radar? Or
I did see it. I did see it. I just chose not to take it. Yeah, I mean, it had that shakeout right after. You see how it tried to break out, then shook right back to the 20, and then
look at
that. Wow.
So I actually got stopped out here, and this is when crude put in that nasty close, and then as soon as you gap back up and got back above the 50, that was my okay. We're just shaking out. So, because I actually bought this in November off the 50-day. And I've always reminded myself that commodities have to be bought on pullbacks. Mm-hmm. You do not want to buy breakouts on commodities in general. So that was kind of my thinking. And then it was basically just getting long again on the 19th, risking off the 50-day, adding some more on the 22nd. And then obviously this was the gap up on Venezuela news. That sells off because, it's always a people chase, sell the news event, and then just off to the races. But even with like Venezuela, you were already in a higher low, steady uptrend well before the news hit. So I was like, I'm still going to hold it through this nasty pullback, although it sucks, and just continue to use the 50-day. And we were never able to close below the 50-day. And, now I've gotten to the point where the 50-day is effectively my stop. So
yeah. Yeah, no, that's a great position to be in. That's the position you want to be in for sure.
Yeah. Although it's super slow, right? I mean, there's nothing sexy about being up 20-something% in 3 months.
Yeah. I mean that's the thing. It's like the risk reward. It's hard to get the big R multiple winners. I mean, it's tough. So that's why I stick with growth.
Markets are closing on the lows.
Oh geez, let me see that.
I mean, being in cash, you gotta feel pretty good about that, don't you?
Oh yeah, of course, yeah, of course, yeah, I feel good. I mean, yeah, of course. I mean, look, I have been trying to short, and I've gotten chopped up so many times. Like, you know what? I'm gonna, I'm just gonna stick with cash. If the market pulls back, whatever,
This app loving was so easy, Christian.
Yeah.
The funny part is, it was a perfect short on Tuesday. I shorted it last Thursday and on Friday, and I did not short it on Tuesday.
Yeah.
So it's like, and this happens often, especially when you're trying to manage super tight risk. Timing is everything. So
it's everything.
you can have all of the right ideas under the sun, but if your timing sucks, and then it's one of those things too, where like I always like to take a smaller starter at first, and then I like to add to my winner, and then add to my winner, and add to my winner,
Yeah.
and then you like pyramid a position up. But if like my initial starter is wrong, I lose very little. I know you've told me before there are times when you like to take your whole position at once because you're anchoring your risk to the tightest spot effectively.
Yes. I mean, my best trades are definitely when I pyramid. I mean, those are my best trades. I've always pyramided multiple times. I just wanted to point out that for traders, so when I was struggling the first few years, I would often find myself in spots where I would buy these names and get stopped out or shaken out, and then they would take off. And rather than get discouraged about it, I was like, wow, I'm in the right names. Like I'm seeing it. Like my stock selection is good, if that makes sense.
Right.
Rather than getting discouraged, like, oh man, I got shaken out again. I got knocked out. It's like, oh wow, yeah, I got shaken out, but I was in the right. This is the name that went. I'm doing the right, a good job of picking the right names. So it's just a matter of like, getting the timing a little better and also not being afraid to re-enter at a higher price. Because I think a lot of traders struggle with, you get in the name, you think you're well positioned, it shakes you out, and then it snaps right back, and you're just like, oh geez, like it's doing what I thought it was going to do, but now I have to pay a higher price. And a lot of people then hesitate. Is they can't, the ego, they don't want to get back in, and then it just keeps going, and then you get left behind, and then they end up chasing later at an even higher price.
Perfect example. So Robinhood on earnings and after hours. I love the earnings, love the report, bought in after hours at $50. And I told myself, I'm going to use today's lows, 46 as my stop. The very next day it sells off all day, and I sell my shares in after hours when it takes it goes even lower in after hours. I sell 46. It was literally the low. And then what didn't I do? I didn't buy above this high. So I remember 51.30. I had it on the watch list. I see the subtle gap up, and I'm just like, nah, I'm not going to chase the subtle gap up. I don't chase the subtle gap up, and obviously, the rest is history.
Same thing. I did not. I was watching that gap up as it went, and I hesitated, and then I was like, oh, it's gone. I missed it, but I did end up buying it at the all-time high, like right. Like in the 76 area.
Right here.
Yeah. I did buy it I did buy it there, but I bought it with absolutely no size. It was like, oh geez, you missed the ideal buy point.
Yep.
So I bought it with zero size, but of course
Yep.
And then that was the smoothest trender from the bear market. I mean, I was heavy Palantir.
I was in Palantir, but here's a funny one. So I was in this at $100. I got stopped out on this gap down on earnings. As well. So I didn't respect the 20. I was in at like just right through this little pivot here. And I remember kind of telling myself, all right, well, fine. I bought it on the 23rd, and then I thought it could go lower, and I didn't want to watch the rest of my gains come back on me. Yeah. So rather than respecting the 20-day moving average, I knocked myself out. Here's one even worse. And it still makes me disgusted to look at. CLS. So I bought this at $100 right here, kind of going through these highs as well. Mm-hmm. And I catch this move, but then I shake myself out on this bar. And then CLS, well, the rest is history as well.
I remember so many of those names that they just ran up the right side. They barely pull in for 5 days and then just immediately take off. And I remember thinking, oh man, like the handle, like I wanted to see it longer or deeper or whatever, and they just kept going. And that's what happens in strong bull markets. The names don't wait; they just go, and they just keep going one after another. But if you were to take those same setups, like in this kind of environment, you would just get annihilated. I mean, not that they would even set up quite like that, but trying to buy, short pivots like that, it's just not going to work unless you're in a really powerful environment. Has been my experience. So so the environment matters, so much. Wow.
It's everything. Environment is literally everything, especially for what you're trading. Sometimes people will, throw out a generic question as to, Ariel, the market's going down. Do I sell my positions? And then the answer is no, you don't just randomly sell your stuff. Like, what if your market that you're trading is going up, right? And it's the crude oil, it's the fertilizers. If you've got great positions in those, trim and trail, trim and trail. If you get extended from the 50, trim it off. And if it's not extended, it's just building and stair stepping higher, hold it. That's all you can really do. So yeah, it's like but the market environment is everything. If you want to trade growth names, again, what do you, I have to ask you again, like, what do you make of seeing an FSLY go higher? Or does that not even matter to you?
I'm in it. I mean, I took a very small position on the episodic pivot, but in general, this is not the kind of name, because it's the highs were what 136 and 20. I mean, I traded it in 2020. The highs were 136. It gaps up, huge monster move, and it's at 15. It's like, okay, I mean, that's great, but it's so far off its highs. I haven't had as much success trying to taking these names off the bottoms. Unless the market is coming out of a major bear market, right? But no, I have the name, and I'm still in it, and I'm going to let it trend as long as it can. But yeah, I mean, it's just not I prefer names at their highs with the market. So
at all-time highs.
I've had the most success with those for sure.
That's interesting.
I mean, it's like the green line breakout, the Dr. Wish. I don't know if you've seen that. Yeah, I mean, it's the same idea. I mean, just look at 2024, 2020 when these names make new all-time highs. They just keep going. I mean, Robinhood, Palantir. I mean, you could go down a laundry list of names.
Twilio, oh yes, breaking through their all-time highs is or that IPO high.
Yeah.
Yeah, I mean, and this is a hell of a move. I mean, you're talking like multiple hundreds of percent for a Palantir.
Oh man! So if you go back to the IPO-based Palantir formed, I was in that name heavy at like
here
like $10. Oh yeah, I was in that literally perfect.
And look at how nice this
literally
was.
I was in that name right again, $11, like heavy. And I remember I mean like you said, I shook myself out. I think it was like
here.
Yeah, like on something ridiculous like that, or maybe it was like on when it gapped up and sold off and I forget which day it was, but
one of these two.
I sold in a spot that like it was just like, oh my god, like what have you done?
What? Yeah,
because the name just went vertical from there.
Even one of these, the only like real IPO, like young IP. I actually bought IBIT, which was the ETF for crypto. I'm sure and this one was here. Although you had kind of sold off, I thought this consolidation was absolutely perfect.
Mm-hmm.
So, but even that Palantir consolidation, just so much nicer from that IPO, man.
Oh yeah, I mean it's like picture perfect.
It's literally picture perfect. Are you doing like a nightly work to scan for new IPOs all the time?
I track the IPOs coming out, especially like the hot ones. So I don't know if I'd say it's nightly work, but I'm like keeping tabs on the IPOs. But most of the name, like Palantir was an extremely liquid IPO. Although I think it was a direct. I don't think it was even an IPO. I think it was a direct offering. Was it not?
For Palantir?
Yeah, I don't think that it was an official IPO. I thought they just went straight to. What's it called? Is a direct offering where like the shareholders just can sell as much as they want right at the open? I'm pretty sure that's what it was with Palantir. It was different.
Huh.
I'm almost certain it wasn't a traditional IPO. They just immediately went like public and like it was fully available to trade.
Yeah, I was in the midst of some of my scalping days during this Palantir, so I wasn't catching these large. I was not catching these large trends.
Look, that's a really strong direct listing. That's what it's called. Yeah.
Direct listing. Okay, got it.
Yeah, but no, I mean those were the kind of moves in 2020. I mean, you just had these names. I mean, the SPACs. I mean, you had names double, triple, quadruple, like in a few weeks, just over and over and over again. So, no, I mean that's the market environment. I mean, even earlier this year and last year with like the crypto treasuries, right? They announced the crypto treasury, and the name like goes up tenfold.
Or the Ethereum treasury, this SBET.
Yeah. SBET or you're just not seeing moves like that anymore. So,
BMNR.
Yeah, BMNR. I remember someone was telling me how bullish they were on it, and I was like, you realize the move it made, it went from 3 to 160. That move percentage-wise is the same move that MicroStrategy made from its lows to its ultimate top over 2.5 years. BMNR did it in 5 days. Okay, like that. I mean, it's like literally playing cash up with MicroStrategy, and it did it. And then it's like. Then it dropped 70%. They're like, oh, I think it's going higher. I'm like, dude, it made the move. Like like that was it. Like it's not going any higher than that.
Yeah, that's like, and then of course, you'll have people who will just continuously try and buy these dips and buy the dips and buy the dips. And there's going to be a time when this gives another spike, right?
Yeah.
Like even GameStop gave another spike.
Yeah.
Surprisingly enough, wasn't that GameStop spike even higher than its original move? Almost, very close, very close. All things considered.
Yeah.
I mean, half of the way there, you wouldn't think that it would have had a secondary. And here it is, just tightening up
Still
once
alive.
again.
Incredible.
Meanwhile, AMC is totally done. Oh man, I do remember somebody mentioned Indo. I remember when the oils had their big sympathy move, and it was Indo, MXC, HUSA. I remember I traded HUSA as like a sympathy, and like you went from like, I remember I bought at like 5 and it went to 15 overnight. So it's like those are the kind of like those are dreams. Right,
Yeah.
to catch a 200% plus move.
Those are nice, and they'll come again. Just have to wait for this correction to end, and hopefully it's sooner rather than later. But the price action, I mean, it might take
Adobe
a
on
while.
an earnings gap down, Christian.
Let's see. Yeah, I mean that's like in a pretty long stage 4. Yeah. Wow.
Already an aggressive bear for software.
The sector is 193 out of 197. Computer software desktop 193
Yeah,
out of 197.
it's as bad as it gets. It's as bad as it gets. So, and even like a ServiceNow, just when you think these names are, rallying well, all they do is just rally into their declining 50-day and they're rolling over.
Yeah.
Spotify was picture perfect. Nick introduced me to using his support and resistance gaps, so just unfilled gaps from daily levels.
Mm-hmm.
Christian, if you had shorted this thing when it failed at its resistance gap, I mean, you won't even believe the sort of risk reward for shorting this thing as it fails its resistance gap. Imagine taking your short here.
Yeah.
Like 569 effectively. You're leaving yourself with a 0.3% risk when it hits that resistance, because it's like you go all the way from these lows all the way into this resistance gap going back to January.
Oh, wow.
And then it just, and so that's your risk. And then so far, here's your reward.
Wow.
0.2% risk. And on the flip side, you're up almost 11% on the downside.
Wow.
So shout out Nick Drendel for the support and resistance gaps.
Wow.
And
cool.
And even a ServiceNow, lower in after hours. Yes, software. And now people are supposed to be comfortable holding risk overnight with semiconductors living below the 50, with the QQQE taking out Monday's lows. I mean, if we could just get this over with soon. And then I also have a little slight issue with this too, Christian, because I don't use this as much as in my own trading. But like, what do you make about using something like the T2 108, which is like stocks above their 40, or X many stocks below their 5-day or their 200-day, to gauge sentiment when you're just potentially starting to lose the 200 on the SPY or the Qs?
Right. So I do look at the T2 108 daily. I have that in my sentiment thing, so I do track it. So again, that's one of the things where it needs to get to an extreme reading before it's one of those like you can just ignore it 90% plus of the time, and when it gets to an extreme either on the upside or downside, then you can pay attention to it. So you really need to see it get, I think 15-ish is around correction. Like that's like, okay, the correction is like that's a legit correction, and then single digits is like end of the world bear market. I mean, that's like you can almost buy anything if it gets to single digits. It's such an extreme washout.
When you get down there in terms of a washout, at that point, are you just looking for like an opening print reversal? So in the morning, you'll have gapped down, you'll have gone down, you'll have gone down, you'll have gone down. Usually like on the last day, it'll be with a little bit of a subtle gap down, and then the morning washout. Are you then just basically looking for a reversal of the opening print? And then that's kind of your cue to, hey, we're super oversold on the market. Sentiment is super washed out. How do you actually execute?
I mean, that's literally what I did. And I mean, the last time that happened was Liberation Day lows. Yep. And that's what I did with Palantir and what I did with QQQ. It's just like that first 5-minute bar. When it took out that first bar gap down, like made a new high, I bought it. But That's the first time I've ever done that. In the past, I haven't tried to catch lows, but it was just such an extreme event that I did. I mean, that's like the last time you got a reading, T2108, the daily close was at 4, okay? But intraday, it probably got to like below 2, okay? And that is an extremely rare reading. The last time it got to that was COVID. So we're talking a once every 4 year, maybe even long. I mean, COVID, it was below 4 for like 2 weeks, okay? Yeah, I mean, so Liberation Day lows and COVID. And then before that, I mean, maybe it was like 08, 09, before 2020, because there really weren't any brutal bear markets where it got to single digits. I mean, you could go to T218 and like go to monthly and then zoom out and see, but it is very rare to get that into the single digits, and especially for it to hold single digits for more than a day or two. And so COVID was, very extreme.
And, I've always heard something from people who have been trading a whole lot longer than I have. And you'll hear people say that crashes actually happen from like these oversold. So like you'll get that T2108 and you'll see something like.
Okay. Sorry. I just looked. So the only times it's gotten below 2 were COVID, financial crisis, 0809, and 1987. Those are the only times in the history going back to 1980.
4 times?
3 times.
Okay, so COVID, financial crisis.
COVID, and financial crisis, and then Liberation Day it got to 3, but it got to like 1 point something in COVID and financial crisis, and 87 it got below 1. It got to like 0.5. So
wow.
Only 3 times ever. So that's how rare it is for that to get to like sub 3 single digits. The only time it's ever gotten to single digits to 5 has been more like the 90s bear market, financial crisis, 2016, 2018, 2020, 2025. So it's rare. I mean, it's very rare for even to get to 5, let alone 2. So yeah, if it gets to that level, it's like the world's ending. You just buy it. you just buy it.
What's the worst that can happen?
Yeah, what's the worst gonna happen? Yeah.
If it's going any lower, we're money won't even matter. We're all in trouble anyway.
Exactly. Yeah. So 87, 08, and COVID were like the 3 big events where it got below 2.
That's unbelievable. Yeah. Actually.
So that's how rare it is. So that's why when Liberation Day got below 5, it's like and you get like a multiple dap downs in a row. I was willing to give it a shot.
That's unbelievable.
It might be another 4 years. It might be another 10. I mean, it's like a 10, 20 year event when it gets below 3. So they don't come around often, but when it does, it's like there's a big opportunity that's around the corner. That's for sure.
I played both TQQQ on the 7th and on the 9th, and I just treated them as scalps. Just although obviously looking in hindsight, I should have been patient, dude. I mean, you're talking about a 200% move. But of course, like in real time, I'm like waiting for setups to occur, but I feel like there's just a trade opportunity. So like mentally, I try to separate myself from the idea of what can I hold and swing, and then what is just there to like, create a little bit of cash flow just to kind of get me by and like scratch the itch of clicking the button, right? Because I still want to click the button and make money, but like, what are we going to do it on? This is just a trade opportunity, something that's just washing out below the 200. It's even like IGV. I looked at IGV as a potential, just a trade opportunity on this washout. I didn't look at it as like, I'm going to nail the generational lows on IGV and then that's it. No, I looked at it as I just want to be able to buy it, catch a 3, 4, 5 day bounce, put a little bit of money in my pocket while I deal with all this other shitty chop that's going on out here.
Yeah.
So it's, can we ask some questions, Ariel? Yeah, go ahead. Shoot, brother. Anything on my radar for a short? I think we probably already, I don't want to say we missed some of that opportunity, because if an NVIDIA starts to lose the 200 day, if AVGO starts to lose the 200 day, I think we could just be at the start of a bigger correction, which sucks to even say out loud. Part of me says, well, NVIDIA's bucking the trend. And, once the market volatility is done, NVIDIA is going to, go higher. I want to agree with that for sure. But the other part of me says, if NVIDIA starts to lose the 200, why can't this be a late stage base as well on Nvidia? And if that's the case, and Nvidia is going to wash out, like let's say Netflix or even an Abercrombie, you know, it's we're in for some months of pain, which just sucks, right? We're probably going to have some sharp reversals, but if Nvidia and an AVGO start to lose the 200-day, and you start to see ASML, TSM, LRCX, KLAC, you start to see the memories top or go on their parabolic move and then top, we're probably in for months of shit, which is why I told Christian earlier on, I think maybe this goes on until August, September. And then we get Q4 is like the only good part of 2026. And by the way, it will have then been 12 months of total shit, right? From October to October or October to September, 10, 11 months. A lot of undisciplined traders are not going to survive that. And by the way, that is exactly what I want. I know that sucks to say, because it makes me sound horrible. But I want a bunch of, when Christian's friends are messaging him and say, hey, Christian, I now want to be a trader just like you. Yeah. Christian, you're probably like, hold on a second.
I've seen this play out. I mean, like I said the other time, you have people subscribing. You see, tons of people coming in and then mass people leaving. I mean, that's just the way it works. There's a very famous trend following firm, I believe it's called Dunn Capital. And if you look at their inflows, right? So the results are like, doing this, everyone piles in. The results do this, everyone exits. Results go back up, everyone piles. It's literally, buy high, sell low over and over and over again. If you look at Peter Lynch's mutual fund, right? It outperformed the S&P for like 25 years straight. I believe the average investor in it lost money. Like literally buying the high, because it gets plastered all over the head, the news and media and Barron's, the wonder kid of Wall Street, and everyone piles in, and then it underperforms, and then everyone sells, and then it just like clockwork. I mean, that's the way humans were herd animals, when in financial markets.
That is always reminds me of not needing to try and time the market. There's never been a 20-year or a 30-year block in stock market's history where it's red. It doesn't matter, and this is why they'll tell you most people can't outperform the index. If you just started to dollar cost average every single 2 weeks for the rest of your life, it doesn't matter where you started to dollar cost average. The stock market's never had a 20-year period where it's red. It's never had a 30-year period where it's red. You could have literally bought the dot-com highs, but if you had just a dollar cost averaging strategy into the market and continued to work your 9 to 5, you would be perfectly fine.
Have you read that book, Ariel, by, I think it's Nick Maggiulio, called Just Keep Buying? And he actually, it's fantastic, but if you read the book, it talks about just buying the SPY and holding, right? And he shows that actually you're better off just buying randomly. So he gives an example of the strategy is either buying in the high or waiting for it's like either a 10 or 15% pullback to buy. And if you wait for the pullback, you would think that'd be the better strategy. But there was a period in the 90s where like you didn't buy for like 4 years straight.
Because the market the 95 to 99.
Yeah, it's like it never pulled back enough to trigger a buy. So even by the time it actually pulled back enough to trigger a buy, like the thing was up like 100%, and then versus you just literally buying the all-time high. Like it was like, I think the comparison was you buy the all-time high every year, or you wait for a 10% pullback and then you buy. And the all-time high buy outperformed, or maybe it was like really close, or it might have even outperformed. I'd have to reread the book. But it just completely flips the idea that I don't want to buy the high. I want to wait for a pullback. You just have to get in the S&P and hold it. If you're a longer term investor.
Yeah, and that was one of those things too, where it's just like a friend did an entire Excel spreadsheet. It was like 10-year blocks, 20-year blocks, 30-year blocks. If you take it down to 5-year blocks and you try to time the market, you do go through red periods over 5-year blocks. Yeah. But if you did it over 10 years, 20 years, 30 years, and you just really had a long time horizon, you could just sit there and buy every single month, every single week, a little bit that you can afford to just put in the markets and not look at for 30-year period. And historically, since the beginning of time, you'll be red by the time that 30-year period is up. So
Yeah. Oh, sorry. I have to go, but it was a pleasure. It always
Of course,
is.
Christian. Much love, dude.
And I'll try to get my Discord working so we don't have to do this. I have no idea. I didn't change anything. I promise. It
No,
didn't
you're
work.
good. There are times if you go into your settings, it'll be like where you can hear it from, like your audio output or
Yeah.
your input, which will be your mic.
Yeah. I thought I messed with that and tried to get it to work, but it didn't.
But
But
I'm pretty
I'll
sure
mess with it
the
again.
4,500 people watching right now aren't mad at you.
Okay. Well. Okay. That's good.
So I appreciate you, man. Thanks as always, and we'll catch you. We'll catch you tomorrow.
Yeah. Sounds good.
All
Talk
right,
to you
later.
later. Bye.
All right. All right. Well, if there's any couple of questions, I will stay on for just a few minutes. But otherwise, Christian is the man for doing that, and then I can get my butt moving and do my after hours recap video. Ariel, in the scenario laid out where you grind lower until Q4, would you anticipate that trades during that time will be easier to the short? Of course. If we're just going to grind lower and let's say go on the QQQ, if we're going to grind lower and the objective is we are going down to 2025's high, yeah, shorts into declining moving averages will continue to be way easier. Way easier. And then on the long side, we're going to just wait for a real correction and then a follow through day. We were technically on pace to potentially have a follow through day today, tomorrow, Monday, Tuesday, any one of these days, we can have a follow through day so long as we don't take out Monday's lows. But again, the problem is we're very close to Monday's lows. We could have a small little gap down overnight. And then who wants to hold risk into the weekend? It's like, we're kind of ruining what was a really nice day on Monday. But again, that's I'm not here to predict what the market's going to do. All I know is the most important thing in the market right now is your entry tactics. If you're not getting situated properly, or if you're oversizing positions, like I'm wrong a lot, no matter what, long or short, or I'm early. The difference is I'm not taking big starter positions. I'm adding on to my winners. So like even today on Rocket Lab, I tried to play a bit of a reversal because I saw ASTS and KTOS holding up well. And that didn't work, but I literally had a 2.5% size position. But when something goes on to work for me, I will add to it. I'll add to it. I'll add some more. I'll add some more. And then I'll work myself up into a bigger position. But yeah, it's I think shorts continue to probably be easier in this environment, but you don't want to short in the hole. You want to short into declining moving averages. That is a whole hell of a lot easier. Where did I learn to short into declining moving averages? I learned a lot of my shorting from Gil Morales, but then just my own practice. You're opposed to have more traders in the market when you're teaching a bunch of students. You're opposed to more traders. Yeah, I know that sounds kind of counterintuitive, right? Here's the difference. A lot of the students in my room were going to survive this downtrend, no matter what. I mean, if most people are disciplined enough to at least listen to what I'm saying at face value, yes, they'll survive. But I'm not talking about the students in my room. I'm talking about the grand majority of retail traders who, don't take this as a serious career. They view trading as just like some hobby. So yes, I don't want my students to blow up. Of course not. But inevitably, some of them will struggle. Inevitably, some of them will. And I do want, the students who are in my room to survive. And if they're learning anything from me, then they will, because they'll be doing very, very little, maybe next to nothing in this environment, or they'll learn to buy undercut rallies and short into supply. That's probably the thing I've repeated most in the room for the last month or more. Is it possible to even blow up with 0.5% risk per trade? Not really. It would take a lot of shitty trading to do that, but that's the entire idea. Your risk starts that small. In fact, in some cases, your risk starts even smaller, like 0.5% risk per trade is even a lot in this environment. So, yeah, it's a lot in this environment. It looks like it's setting up for another great short. Yeah, that's possible. USO, in my opinion, probably doesn't get back above this 124 level. I would suspect that we probably go sideways here for the better part of a week or so. So the better part of a week. Do I have specific criteria for market action to be taking UNR entries? Example, only when the market is gapping down or pulling back. No, I want to see stocks pulling back into ascending moving averages, but I'm still always looking at the groups within, or the stocks within the group. If the group is not starting to bounce, I don't just take a setup in a vacuum. I If I'm going to take a UNR, a stock will have pulled back. That's fine. But I'm waiting for that stock and the group and the market to begin to bounce as well. I really don't like taking setups in a vacuum. So market action when I go long, although it's weak on the daily because it's pulling back, it then starts to firm up and strengthen up as we're starting to turn back up. So that is kind of how I take those. And ultimately, in this environment, buying breakouts is just not the way. Buying pullbacks into ascending moving averages, selling into supply. Just go back and look at an AppLovin, look at a Spotify, look at a ServiceNow. Those are the things you want to be focused on if you're playing the short side. No, look, I kind of get this question all the time. When I first started trading, I was a day trader and I was trading in the hottest environment ever. And I was trading sympathy plays and I was trading very aggressively. So, I don't trade the same way. One, because the way I, the way I trade now keeps me from ever taking massive drawdowns. But secondly, it's a much more scalable way to trade for the next 30 years, 40 years of my career. So I want to be able to do my job until I'm mid 70s without too much of a headache. And the way I trade now will do that. And it'll allow me to compound a bigger portfolio over time versus just trying to run up a small portfolio, which, by the way, I can't even trade that way anymore because there just aren't sympathy plays like there were in 2020. They just don't exist. We don't have stocks going from 1 to 20 in a day, and then the sympathy play going 200-300% in the same day as well. Could you share the monthly data service platforms that you subscribe to? So I just use a scanning platform. I use DeepView. I use the theme tracker that I built, and I use FinViz. I use Trade Exchange for news. That's pretty much all you need, and then you need to build your scans. You've wasted time trading Forex since 2020. It's the most efficient market in the world. Probably not the way to go. ATRO, yeah, could have been a short a few days ago, or maybe even today on the loss of these prior day lows and the 50 simple moving average. I prefer shorting into strength. So even this little bounce at the 50 and then the rejection of the 5-day seemed to make a little bit more sense. So something like right here, just not very liquid, so not something I could trade. Adobe still going down, huh? On earnings. TSEM for a short. Isn't this a semiconductor? Tower Semi? Yeah, maybe. Where was the short today? We talk about this all the time. Short into strength at a flattening or declining moving average. Today was your short. Where could you have shorted? Realistically, right when it lost VWAP today. Or obviously your 620 setup occurred just a little bit lower. And even on this push, even if you were using high of day, you wouldn't have gotten stopped out. So a little bit of a wide risk here. Here, not so much. But yeah, today, maybe. Today was maybe the short if you really wanted it. LITE, I don't know. I don't know that I would short this one just yet, but yeah, maybe. Could have been. LITE, GLW, CIEN, COHR, COHR. I know somebody shorted CIEN today, if I'm not mistaken, in the room, and it closed on lows. They shorted like 347. Yeah, I don't hate it. And actually, I'm missing the. Let me add the 20 SMA here, or exponential. Yeah, even right here wasn't all that bad. AOI short, I don't know. Too much of a down move today. I don't know that I would touch it. You should see a link on YouTube. They're normally at the ends of all my recap videos too. Do I ever try to front run a move before the confirmation? Not really. I mean, sometimes, dude. Sometimes, but it never really ends well. I mean, Rigetti, man, I'm kind of kicking myself. I still don't have a $55 cost basis on this name. If you got an AOI short, I mean, did you short it today? I mean, kind of a weak close on the lows and a gap down as well. Man, when this thing implodes, it really, really unwinds. 18, 20% moves in a day. Just nuts from highs. 20% move off yesterday's close. Just nuts. Why there are tickers with very high dollar volume, but with little or not bars on pre-market in comparison. Not all tickers are going to trade with high dollar volume in pre and post market. Oh, you shorted 112 on this VWAP breakdown, basically, right in here, I'm assuming. Well, that ended up working out fairly well. Just a quick little 8% move. Nice job. All right, guys. I'm going to get my butt moving. Otherwise, I'd probably sit here with you guys for a while and continue to answer some questions. I appreciate Christian for hopping on. And I'll see you guys bright and early tomorrow for pre-market prep. And then maybe, just maybe, we'll do a few more of these chat conversations with we'll see if we can get Clement on here. I'd love to get some other traders for the afternoon and maybe chat markets over the coming weeks. I think, this was a ton of fun, and there seemed to be a good turnout, and you guys appreciated it. So if you guys like it, happy to do it. But I will see you guys tomorrow morning. And yeah, hopefully you guys are staying safe out there. And we'll see you guys for the after hours recap. Later.